Hello, everyone. It's Dr. Kerry Yerkew, and welcome to today's Practice Minute. Today, we have a special guest, Steven Theimer from Investors Group, and Steven's going to talk to us about investments and insurance. Steven, welcome to the program.
Hi, thanks, Kerry. Happy to be back here.
Steven, tell us a little bit about what you do.
So I'm a financial planner with Investors Group, now known as IG Wealth Management, and I help business owners and professionals with their investments, insurance, and with their goals. I really like to build financial confidence in people and try to bring a little bit of style and flair to the industry that may have a bad reputation amongst some, but there's a lot of good changes in the industry and a lot of people doing a lot of good things, and I'm just proud to be a part of that.
Excellent. I have some questions for you today, Steven. What's your advice for a seasoned health professional, someone who's been doing their occupation, whether it's a doctor, therapist, for a long time and is well established?
Oh, well, that's a really good question, Kerry. My answer would have to be a reminder of this. The most dangerous words in business are, "We've always done it this way." Just because you believe you've heard it all before, you've become successful and you've maintained it, it doesn't mean there isn't room for improvement. The wealth management landscape has changed dramatically over the years, and it's continuing to do so at a really rapid pace. I encourage established professionals to have their financial plan, assuming they have one, which they should, reviewed regularly, and to get a second opinion as well. At the very least, you'll have confirmation that what you're doing is correct, and at best, there's some major flaws that can be discovered and real harm prevented because of those discoveries. I've never seen a financial plan that's more than 12 months old have no room for improvement.
Very good. What about investments and financial planning? It seems to be a shift towards do-it-yourselfers. You see the Robin Hoods in the United States and the brokerages popping up, encouraging low commissions and young professionals to invest on their own. What are your thoughts on that?
Yeah, it certainly is a trend that seems to be gaining a lot of momentum, and it's kind of quite shocking to me. There's several reasons for that. A lot of times the costs are not as low cost as these companies like to claim and these platforms like to claim. And investments and especially financial planning, it's not something you should do all by yourself. Without the proper education, you need some help. And in my opinion, healthcare professionals and other professional service providers, they should be the first types of people that will hire professional help. You know the value that you provide to your patients and your clients, and they'd be foolish to try and diagnose or treat themselves. Yet maybe a lot of them are, people are used to being the expert, so they fail to seek out that proper wealth management advice, and they fail to maintain an up-to-date written holistic financial plan. It's just, please, I encourage, find a wealth professional that you trust and you can get along with, and don't skip out on your annual checkup with them.
That's smart. Yes. It reminds me of the story of, I went to see my CIBC banker years ago, and I was talking about investments, and he said he had a medical doctor that had saved up quite a bit of money. I think it was around the $400,000 mark, and she had gotten a hot tip from a friend on an oil company, and she put all of that into an oil company, and that oil company ended up going bankrupt, and she lost everything. And he was sharing that story with me, which I still remember to this day, years later. But
it's heartbreaking. I've seen a lot of people come to me or to my colleagues, and they've lost a lot of money in the past, and so they're very apprehensive or cautious, and maybe it was from poor advice or like a do-it-yourself type thing. But it's certainly something that you need to have the proper education in, and And, more heads is better than one.
Right. So, Stephen, what types of investments do you recommend?
Okay. Well, that's a pretty big topic to cover. But, my investment recommendations, they vary drastically from person to person. And beyond that, even from portfolio to portfolio. So to explain that, every investment you make should have a goal attached to it. And the investment should match not only the goal from a dollars and cents perspective, but your risk tolerance as well. And another phrase I like to use for risk tolerance, to be more relatable, is the sleep at night factor. I really believe in structuring your investments to achieve your goal with as little risk as possible. If a 5.5% annual rate of return will get you where you want to be, why take on the additional risk of striving for 7, 8, or 10%? You don't need to. In further regards to portfolio construction, you want to ensure your investments are properly diversified. And something that we've all heard, don't put your eggs all in one basket, that sort of thing. But what that really means is kind of misunderstood, I feel. There's so many new types of investments available to retail investors. Retail investors meaning people like you and me that have not been available in the past. It's not just about equity, fixed income, and cash anymore. There's different alternative investments that utilize advanced strategies and different asset classes, private equity, venture capital, commodities, options trading, etc. These have been in use by pension funds and hedge fund managers for decades, but they're only recently available to the general public, and only if you know where to look. And, along with the alternative investment strategies, we now have access to private market investments, which would be investments that are not traded on the public exchange or market, that were, again, either off limits or too expensive for the average person. So, all these things, they kind of, reiterate what I was saying before, is you need a proper financial plan, and it needs to be accompanied by a modern investment portfolio.
That makes sense. How about, let's switch gears here and talk about young professionals. I talk to a lot of students just coming out of professional school. They're going to be a doctor, dentist, chiropractor, naturopath, massage therapist soon. And so they're looking to establish themselves. What do you recommend for them?
Yeah, that's another great question. For, a young professional, somebody who's just starting out in his or her career, my advice would be to really leverage your network. Now, it may first require building up a network, but you can do that through, LinkedIn, your colleagues, that sort of thing. There's a lot of people like yourself more than happy to give advice and share their experiences. Why try to think of everything on your own when you can learn from other people's mistakes and their successes as well?
Right. What is something that a young professional should avoid? It's good to know, learn from other people's mistakes, like you said. What should they avoid?
Yeah, so many things that should be avoided, but something that I find common in new business owners, and I imagine that translates to young professionals as well, is decision paralysis, and that results in too much procrastination. So what I mean by that is you have a lot of decisions to make and a lot of information to consider when you're graduating or in the early phase of your practice. And it's important to not let these, many things intimidate you to the point where you stop taking care of business, both in your practice and in your financial life. And an actionable piece of advice with that would be to create a written list of decision deadlines and stick to it. Right. So, for example, this week I'm going to decide on X. Next week will be Y, and the following week will be Z. Right. Really encourage you to go and find the information that you need to consider, process it, and make a decision and act on it, and get your results in a time.
Yeah, that makes sense. Now, what are your thoughts on insurance for young health professionals? You know, you get out of school, you've invested all this time and effort, you have this unique skill set, excuse me, a unique skill set. What is your advice as far as insurance for health professionals?
Yeah, that's insurance, a very, very important topic. And it's, even though it's probably one of the most talked about, financial considerations for healthcare professionals, I really don't think it's something that can ever be talked about enough.
Mhm.
Personal coverage, you have really four main types of insurance to consider. You have your life insurance, disability insurance, critical illness insurance, and then your own health and dental benefits. Now, they're all very important, and none, of course, should be overlooked. So first off, life insurance, my sincerest advice, especially to those starting out, is do not sign up for a complex life insurance policy that you may not understand and probably aren't able to fully utilize. Just because you've heard, oh, this insurance policy is also an investment product and sounds so good.
Right.
Time and time again, I've seen professionals paying far too much for life insurance, and then years down the road, they don't get the benefits that they expect. And in the process, they've wasted a lot of money and they miss out on a lot of other opportunities because of those high premiums.
Mm-hmm.
Now, disability insurance, it's very, very important. It's something that you should not cheap out on. Disability insurance protects your most valuable asset, which, by the way, I know you know this, for our listeners here, it's not your house, and it's definitely not your car.
Right.
The ability to do your job and earn an income that is your number one most valuable asset. It's something you've worked very hard to acquire, and a skill you've worked hard to refine, and it needs to be protected. And then, critical illness, health and dental benefits, of course, they're very important as well, but I think I'm going to let those key points I just mentioned stand alone.
That sounds really good. Is there anything else you'd like to add, Steven, before we wrap up this podcast? How can people reach you if they have questions? How should they contact you?
Yeah. So, just to kind of finalize things up, I would say that, never be afraid to reach for the stars. Don't let anything, especially yourself, stand in your way. And if you reach for the stars and you don't succeed, well, at least you've made it to the moon then. And so for getting a hold of me, all over social media, Facebook, LinkedIn, it's just starting Instagram, and email. I got steven.theimer@ig.ca. I do text messages, video chats. I'm sure we can attach some contact information to the bottom. And yeah, if anyone's interested, give me a call and I'd be happy to discuss someone, and maybe I can help you myself, or I can refer you to somebody. But, don't wait.
Very good. We've had Steven Theimer on our show today. I'll put his contact information below so you can reach out to him. He is working with Investors Group, and today we talked about investments and insurance. If you have any questions, reach out to him. Steven, thanks for being on our show today.
Oh, it's been a pleasure. Thanks for having me, Carrie.